All right. Welcome back to another video. Recording this on November 16th, 2023. Whenever you guys are watching this video, hope you're doing amazing. Hope you are learning. Hope you are seeing results in your trading. You're growing as a person. All of these reasons why you joined 1022, I hope they're coming to fruition. I hope you're watching the seeds grow that you planted every single day. You're showing up, you're staying consistent, and you're putting in the grind and the work, because that's what it takes to be the best, to be a winner. And I don't know about you guys, but I don't like to be a loser. You can lose in the markets, you can have a losing trade, you can learn from those losses, but you never quit, you never give up, and once you give up, once you quit, then you're a loser, and nobody likes a loser. So let's go ahead and get into the next lesson. This one is called chart patterns. I do not trade chart patterns as often as I should. There are so many chart patterns happening throughout the market. I'm not very good at spotting them. I've never been a big harmonic pattern trader. And that is because I like just trading the naked chart. Some people love the patterns. Some people find them super, super easily and find that it speaks to them when they're analyzing the market. So I want to show you guys as many ways as possible to analyze the market to make you a successful trader. So let's waste no time, get straight into it. I'm going to share my screen. We're going to go over each pattern on the slideshow, and then I'll actually go through and show you guys what that pattern looks like. On the internet. I didn't want to go through the chart and mark all of it up because, like I said, I'm not good at patterns. I don't trade them very well. It actually is something, if you want to look into deeper, hopefully someone a part of the community is better with trading chart patterns, but you do want to maybe go online and look at these patterns and study the patterns and try to mark them out on your own on TradingView. So chart patterns are recurring formations or shapes that appear on price charts representing the historical price movements of a financial instrument. These patterns are studied by traders to gain insights into future price movements and make trading decisions. Traders often combine chart patterns with support and resistance levels, trend lines, and oscillators to increase probability of successful trades. The first type of pattern is a head and shoulders pattern. This pattern consists of three peaks, with the middle peak being the head and being the higher or lower than the other two, which is the shoulders. This suggests a potential trend reversal from bullish to bearish. Now, however, when it's consolidating, if it's in an uptrend and then it consolidates, it still can continue in that trendward, in that trend direction. So the head and shoulders pattern is a little bit iffy from what I've actually seen. So on Safari here, the type of image that they have is a let's see here. They have a left shoulder. So it looks like it's trending downward, right? And then we have the left shoulder here, the head here, and then the right shoulder get created. So this is the right, this is the left, this is the head, this is the neckline, and then boom, price goes up to the upside. So it does look like trend was trading downward, and then it created the pattern and went on to the upside. Here's another image here where you have the left shoulder, the head, and the right shoulder, and then it reverses to the downside. So this pattern is actually one of the easier or simpler patterns to be on the lookout for. Like I said, I personally do not trade these type of patterns, but if you're going to trade them, this would be a great image to reference if you are going to trade the head and shoulders pattern. So any time frame, I believe it happens on every time frame because the chart fractalizes when you change throughout the from the higher time frame to the lower time frame. So like I said, left shoulder, head, right shoulder. It kind of looks like a W, but with the right and left shoulder being lower than the head. So that is the first pattern that there is on the chart patterns. Now, next we have the double top or double bottom. A double top pattern occurs when the price reaches a resistance level twice and fails to break it, indicating a potential trend reversal. Conversely, a double bottom pattern occurs when the price hits a support level twice and fails to break below it, suggesting a potential trend reversal from bearish to bullish. A double top, to me, is a double top and a double bottom. To me, is simply just support and resistance. Like that's how I see a double bottom. You know, very straightforward on a double top. Like look, like literally first top, second top, reverse. You know, like to me, that's just a resistance. I don't. That's why I'm like, okay, like patterns. You know, patterns, right? I'd rather just trade price action. I'd rather trade support and resistance. I wouldn't try to combine, you know, all that in there and make it more complicated on myself looking for like double top, double bottom. But whatever works for you at the end of the day, right? We're trying to get you in a position to be able to be profitable in the market. And if identifying double top, double bottom, if that's your go-to, that's your go-to, right? So that's what that looks like. Here's kind of a price chart we have of the double top pattern where we have a 1 and then 2. So this is a double top. Also, they drew a harmonic pattern in there as well, which I'm just not a huge fan of at all. So, you know, that's that there. We have the triangle formation. Triangles are formed by converging trend lines, indicating a period of consolidation before a potential breakout. There are 3 types of ascending triangles. You have a higher lows and flat upper resistance, and then a descending triangle, which are lower highs and a flat lower support. You also have a symmetrical triangle, which are converging trend lines without a clear slope. See, like it just reminds me of like algebra. And I'm like, you know, but I am going through them because a lot of traders like patterns. I personally just don't, you know what I mean? So anyway, you have descending lower highs here. See how we have descending higher lows. So this lower highs. Oh my gosh. Lower highs. So we have a lower high, a lower high, a lower high. We have a higher low, higher low, higher low. See how it's forming a triangle and then it breaks out to the upside, right? This is what I was talking about. You have a symmetrical triangle, you have a ascending triangle and a descending triangle. So that symmetrical triangle was one we just looked at where it kind of looks symmetrically appealing. It creates a triangle perfectly at almost from a 90-degree angle perspective going that way. You have your ascending triangle where the bottom is making higher lows, and then this is just a flat right here. So it's just flat. It doesn't even have the lower highs right here. The descending triangle is you have this bottom part is not forming any higher lows, and then the top part is forming lower highs. So you have that descending triangle and it is a continuation. So it says traders will enter a short position on a break below support. So there you go on that one, the triangle. So if you feel like you love geometry and you love shapes, you love playing with shapes, man, you know, this one might be for you. Definitely not for me, but maybe for you. Who knows? Who knows? You know, is random. So the next 3 patterns that I want to go over is the flag and pennant. The flag and pennant patterns are short-term continuation patterns that occur after a strong price move. A flag pattern resembles a rectangular shape, while a pennant looks like a small symmetrical triangle. These patterns suggest a brief pause before price continues in the direction of the previous trend. So let's go look at a flag and pennant pattern here. So a flag pattern, let's zoom in. A flag pattern is a type of chart continuation that shows candlestick contained in a small parallelogram. So we have a series of lower highs here, and then we have lower lows here. And it's making a flag. You see the rectangle and it looks like a flag, and then you have the staff, which is the uptrend that was created right there. So you have your staff and then the flag, and then it just breaks out. So you have this weird period of consolidation, which is what was explained, and then you have the breakout right there. So that's a bullish flag, and then this is a bearish flag. So you can think of it as reverse, right? When you start to see that consolidation, let's say you're in an uptrend on the daily, and you're looking at 1 hour, 15-minute price action, and you see this consolidation range right here, and it's trading downward, but then you see the flag pattern form, boom, there you go. Maybe you're like, okay, some people are short in the market. I see a bullish flag. I'm about to buy the market because it's still bullish. So you have your bullish flag pattern, and you have your bearish flag pattern. You can see the difference. And like I said, these, you can look these up on the internet. I literally just pulled these up. I looked it up, pulled up the image, and I'm showing it to you guys. But like I said, just if you weren't aware of what patterns were, that's why I'm making this video. So you got it for whoever is interested, will you continue further in that direction. The cup and handle, actually, I used to, funny enough, I used to trade this one pattern right here. I used to look for a teacup and a handle and then trade it higher, when the market was uptrending. So it's literally a rounded cup followed by a handled structure. And it happens actually quite a lot in the market. You'd be really surprised. It's just so weird. Like, you have all this price action on the chart, and then you have to make a cup. It's just silly to me sometimes. So you have your cup here and then your handle. So it says cup and handle, and boom, it just keeps going to the upside. So that's a cup and handle pattern right there. Not too much depth I can go into that, right? Like, cup, handle. I mean, and this right here, right? Like, it's continuing in the uptrend. This was a retracement. Like, if I were looking at these, it's like 1, 2, 3, 4, 5, A, B, C, or 1, 2, 3, 4, 5, 6, 7, right? 8, 9, 10, 11. So it's just a large continuation. And then this was a somewhat of an okay retracement leg right here, probably into further price action down in here. Like, this is a support, resistance, support. You know what I mean? So like, and then if you spot the cup and handle for extra confirmation, there you go. The last pattern is a wedge pattern, rising and falling wedges. So man, it's so crazy. I just dislike patterns so much. Doesn't mean you should dislike them. I just dislike them so much. I don't know why. I think it's so silly. So the rising wedge is when you have an uptrend and it continues to rise, but then it reverses and goes the other way. So you still have that. Man, you know what? The rising wedge, no clue. Never traded it in my life. Never seen it in my life. I have no clue what I'm looking at. Never back tested it. Never traded it before. So I really can't even go over falling wedges. The image to me literally just looks like it creates a wedge in the other direction. So if it's in an uptrend and it has a rising wedge, it reverses. And if you're in a downtrend, it has a rising wedge, it continues downward. And then a falling wedge is where you have a uptrend and it goes downward. The wedge faces downward, the trend goes upward, continues higher. If you're in a downtrend, the wedge faces downward, it reverses and goes upward. So if you want to learn this, take the time to learn it and apply it, and you will probably be successful. Like, there is no technical analysis out there that is not successful. It really just depends on your ability to learn it and apply it in the markets. You know what I mean? So that's going to be it for chart patterns. Like I said in most videos, reach out to the group chat if you have any questions. But for this lesson, don't reach out to me. Yeah, like I try to be as authentic and honest as possible. Do not reach out to me for chart patterns. That is something that I just do not trade, and I cannot help you with them. Hopefully in the community, someone else does. Look it up online, see if somebody else trades them. But hopefully you guys took away from this video, and I will see you guys all in the next one. Take care.